Right, it's the premium video for Thursday the 19th of May. Now, our previous video title was FOMC Minutes Tonight, Anything Can Happen. And that really was, I think, I don't want to say useful, but information that we could take to heart. Because, we were down, we were up. The Dow was up 100 points. It was down 100 points. So a good lesson here: just stay clear. Especially overnight, we're going to be down 300 points or so on the open. Yeah, it definitely isn't anything can happen kind of situation when FOMC minutes are going to be released after our close. Now, what I want to do today is step away from the market a little bit, because it's really important to just think about a couple of things. This is something that Garth Mackenzie from Traders Corner put out yesterday, and Garth is someone I really respect. He's one of the few, if not the only trader who actually shares his trades and has a track record. Okay, yeah. So there's a public track record, and those are really the only people that you need to take any notice of, as far as I'm concerned. Anyway, so what he says, and we'll go through it. It's really important that we do go through it. We'll take a little bit of time. Markets are tricky at the moment. There just doesn't seem to be any follow-through on a lot of stock-specific trades. Okay. Before I'm going to praise you here. Before it, you're underwater, and what started looking out is decent. Recent trades he talks about. It's extremely frustrating, and we understand the frustration amongst our subscribers. He goes on to say that the environment seems to be better suited to intraday trading, which is great, which is what we do. External factors, Gordon, the Rand, he reiterates, trading is extremely tough. From a personal perspective, I feel as if I've just been playing defense the whole year. Now, for a trader like him to say something like that is quite something. One step forward, one step backwards. One step forwards, one step backwards. Every now and then, 2 steps backwards. Okay, now that's important. That means you're losing money, and not just what you expected to lose more than what you did. I've become increasingly inactive, and what have we been saying lately? Some days it's just better to stay away. Okay, a lot of people in the same boat. The numbers have been dwindling over the past months. Okay, his subscribers now. That means that people are being the subscriber numbers are dwindling, most probably because of attrition, because they just simply don't have the money to, or losing capital. Okay, said that trading would not be easy. Easier times will return. Yeah, that normally is the case. You need to protect your capital. I'm always reminded of the saying, if you don't bet you can't win, but if you lose all your chips you can't bet. With all that in mind, we are not suggesting any new trades today. We have a revisit 3 important charts. This suggests great caution on the long side. Okay, so just to give you an idea that a great trader like Mackenzie, who has a trade record, is battling. And if you're battling, don't feel bad about it. Don't attribute the market activity at the moment. Don't attribute this mess, and it is just a mess. That's the only way that you can describe it, to any of your inability or any of your failings or shortcomings or anything like that. That would be the most terrible thing to do. Okay, we are all battling, and we need to adapt, or die. Okay, as Peter de Gace said in the apartheid years, and that was certainly the case. Okay, so now let's just have a look at today very quickly. Another thing I'm going to do a video, and a separate video on, is the Rand and the market. What we have to remember, and I'm going to cover this very quickly as well, is that the ZAR is such an important factor. Okay, and there is a double whammy, a 2 times whammy that the Rand delivers to this market. Okay, the one is just simple arbitrage. BAT, SAB, Anglo-American, BHP Billiton, the major stocks on our market are dual listed. Okay, and with their main listing in London. That means they take their price from London. That means that for us, the ZAR based shares, to merely match the price in London without any movement in London. If the movement on the day was 0%, on the day that the ZAR moves 2%, our prices would need to move 2% to the upside. Okay, so when something like a SAB moves 3%, 2% of that is ZAR. The other percent, the other part of the double whammy, is the 2% increase in revenue that they earn in ZAR terms. Okay, and therefore people look at it as a rand hedge, and these ZAR strength or the ZAR weakness is considered as being supportive of the business case for SAB. So there's an arbitrage case and there's a business case, okay? And that's why we see our market being supported when the rest of the market, the rest of the world is failing or flaying, okay? And we saw it yesterday. We gapped down and we we gapped down to 46,400 or so, and we rallied 600, 800 points. Okay, now why are we rallying 800 points where the rest of the world is, the FTSE certainly was falling by 1% or something like that. Okay, so just bear that in mind. We've been talking about it, and the ZAR headwind and tailwind kick in at different times. They don't necessarily correspond with what's happening on the day, but they suddenly kick in and kick out. Okay, so let's remember that. Right. So let's get to today. Today is a big data day as well. There's unemployment claims from the US, but we're going to gap down this morning, and let's just fill in the pivots so that we can see what's going on there. So the main pivot is at 47,303. Is that right? Yes, it is. The main pivot is at 47,303. Now, I don't think the pivots are any use today, actually, because we had this spike over here. Okay, so they are completely skewed and irrelevant. Okay, what happened here? I don't know. Is it finger trouble? Was it an overthrow? Whatever. So the pivots, I think, are not going to help us. We're going to gap down in the morning, and let's see what happens when that happens. Really, there's no analysis to be made, except that we are in the broadening pattern, and you need to return to the previous analysis we made. Maybe we get up to the top end of this broadening pattern again. If it fails there, we move down. Okay, so I hope it helps. See ya. Stay safe out there. Take heed of what Garth says. Just to recap, it's the Philly Manufacturing Index and the unemployment claims at 2:30. Okay, I hope it helps. See ya.